Here's a Forex blog video for October 18th, 2013, and I was busy today working on our automated trading systems and also what we release to our customers are Forex signals, and I'm actually putting these currency indexes into our signals. And what's so amazing about that is uh, the incredible accuracy. For example, here's the dollar. When it's above its hourly moving average, it tends to trend up. When it hits the upper containment band, it tends to be an area where it stalls and reverses, as you can see here with the pound. Again, here with the pound. When it hits these statistical areas, most times it gets some kind of a bounce. So when it's underneath its hourly, you trade on the short side for the dollar. You want to sell all the dollar pairs until they get down to the lower white band, and then typically you're going to get a bounce, and every once in a while it might go another half an hour. The worst case scenario, 2 or 3 hours underneath there on the super weak days. One set of every 20 to 50 days you're going to have that. But most days, statistically, markets bounce it here because it's based on its volatility. So basically, in a nutshell, you want to buy the strong currencies versus the weak. Most people like to trade the dollar and yen pair. So you can see the dollar's daily, weekly, monthly trends down. It exploded down yesterday, came up and hit the upper band, which is a wonderful trade in itself. When you have a super weak currency and it hits its upper band, it's a great place to go short, and you want to sell the dollar versus the strongest pairs. The yen, it's just chopping around. It's mostly underneath its hourly, daily, weekly, monthly trends down. The pound, it's been trending up and going sideways, so you can certainly look for pound dollar buys. The euro, same thing, and it has a daily, weekly, monthly trend that's up. So let's just bring that up starting off early in the day. You're looking for euro dollar buys basically on little tiny pullbacks and sideways rectangle breakouts. Let's scroll back earlier in the day, and you can see exactly that. You're looking for buys. You get this nice little rectangle pattern breakout right here, and it shoots up. You buy the pullback, which is my favorite trade, because you put your stop right here, and it didn't really take off. You didn't make that much money on this trade because it was already up so much for the last few days. There's, people are taking profits at the highs. That's just bound to happen. You buy this next trade right here, and you can see your risk is small. And even if you got out of it right here, you made more on the trade than your risk. And if you held on a little bit longer, you obviously made, significantly more. But that's the key to trading. Small losses, big wins. And by using the currency indexes, you're in the ones that are most likely to go your way. Let's take a look at these. Daily, weekly, monthly trend of the Australian is up. The New Zealand's longer-term trend is up, but it's down near its lower band. Yeah, as you can see from yesterday, bounced from the lower band all the way to the upper band. So if that happens again today, you're going to have huge potential buying the New Zealand, and the longer time frame weekly monthly trend is up. So why not take a chance on that? If you're right, you're going to make 30 to 50 pips. If you're wrong, because it has a good distance to travel, if you're wrong, you're going to lose 5 to 10 pips. Let's take a look at the New Zealand dollar today. Look, earlier in the day, it's exactly what happened. Again, you have kind of a low here where it briefly went underneath there, bounced up, briefly went underneath there, bounced up. You have a nice little kind of wedge pattern right here, and it exploded up. That's about a 20, 25 pip move. You buy the pullback, you made even more. And that's what happens when you trade with the trend. The dollar's super weak, the New Zealand's super strong. You had the opportunity at this time of buying it at its lows. So that's why I'm just absolutely thrilled. This week was probably one of the best weeks as far as improving our Forex signals. I have put in 35 different support resistance areas, daily, weekly, and monthly pivot levels, which there's 9 of them for each. That's 27 right there. We got the daily and weekly point of control, upper and lower value areas, which is 4 more. Previous days, high and low, previous weeks, high and low, previous months, high and low. All these areas are going to be in there, and we're putting in the actual currency indexes. So if one currency is above its hourly moving average and the other one's underneath it, most times you're going to find pretty high probability trades. Now look at the CAD here. Exploded down, rallied up, kind of going sideways. It's probably likely to try to go lower. The Australian's strong and the New Zealand's strong. So I would bet, without even going into the future, the New Zealand CAD would be one to be looking for buys. And you can see it went up, up, up. And I bet the Australian CAD also did the same thing. Exploded up, pulled back, exploded up again. It doesn't take a rocket scientist to see that when a currency's longer term trend is strong, like the Australian and New Zealand, trading those super longer term trends against the weakest ones when they've had a nice pullback off the low, you never want to buy a currency at its high or sell it at its low. Here's the low. It had a nice, beautiful little pullback off the low. The trend is down. It's likely to resume the trend, whether today, Monday, Tuesday, within one of those next few days, it's going to go down again. It's only a matter of time. And if you trade it against the strongest ones, you're going to find, like oftentimes happens, big moves. So if you were trading the Australian CAD, you basically want to either buy rectangle breakouts, or, which is kind of an example right here. I drew that a little bit wrong. Let's do that again. You're getting into it right here. And usually about 2 hours is the minimum. So it's likely to go up. It's in a rectangle pattern. It breaks out. You put your stop a pip or two underneath the low. And, it went up about 12 to 14 pips. You buy the pullback, which is my preferred method. Buy these pullbacks, and you get into them, with very, very tiny risk. Now, if you're just scalping the market in and out, very likely you're never going to catch every pip. You probably made 1.5 times more than your profit on this one, and 4 or 5 times more than your profit on that one. And even the last one, after it's already exploded up too much, you buy that pullback. Your risk is tiny, right? And it kind of, went up. Anytime it goes up, pulls back, goes up, pulls back, you're going to get out of this pretty much near break even. And I would bet anything that this has gone through our upper containment bands. So the containment bands tell you when the market is likely to reverse. I use the digital signal processing, which is much faster than a simple moving average, exponential moving average to calculate these. And I put on the 1.5 and 2.0 bands. And most times it stalls at the 2.0 band, which is exactly what it did. So you knew that this one's pretty much topped out, probably 70–80% of the time. When it hits the outer bands, it runs out of steam. So if you bought this next pullback right here, well, guess what? You made the most of the profit because you know it's likely to reverse. And you're probably not as much likely to buy this because your potential profit is only this. So it's still a decent risk, tiny risk, bigger reward, but it's not certainly as good as this one, which, has a good potential of making 4 times more or more, because sometimes they go through the bands and keep going. It's rare, probably 30% of the time or less, but it does happen every once in a while. So you have a chance for runaway profits. Everyone probably saw the euro dollar and the pound dollar the other day where it just exploded through these bands. So it's very rare, but it does happen. So if you bought this pullback right here, this is your likely profit target, but you made probably 2.5 times more profit on that trade than you would have, and more than likely you wouldn't be looking to buy up here. But if every once in a while risky trades work, typically outside the bands it's very risky, and all I have to do is go back in time to show that. Outside the bands, if you sold right here, guess what? It went down a little bit, shot up. Outside the bands, came all the way down to the lower band. Outside the bands, down. This day, if you sold outside the bands, you would have made money here. You sold here and maybe made a little bit of money, but it bounced. And that's what typically happens almost every time. And I can put more days on here if you want to go back. The statistics kind of become a little bit less accurate on the past because we're using the past day's data to calculate the statistics, but we'll go back a little further just to let you see that most times the market explodes off of these levels. Sometimes it goes to the red band and stalls. Doesn't go any further. Look, up, up. I mean, if you sell down there, there's not much likely profit more. It's just the way it is. Like I said, 1 out of every 10 or 20 days you might go through the bands. Most of the time it's not going to be by much. Maybe 10 or 15 pips through the white band, and then it reverses. And sometimes it goes through them and goes sideways for a few hours, and then it explodes up. But you never know how it's going to play. I mean, you never know how it's going to play out. But regardless, it's a very foolish thing to sell underneath the 2.0 bands. We use these bands in our FX trade signals because they keep us out of a ton of losses. And the point is to cherry pick the best trades and skip the rest. I mean, yeah, you might miss an occasional 10 or 15 pips, but you're also, if you try to buy up at the high, you're going to miss, buying it at the absolute high for the next 10 hours and not look like a total moron sitting on a losing trade for 10 hours with a huge loss when you should be selling here, especially after the big move down. And it goes up to these areas you want to sell, make a small profit, sell, a little bit bigger profit. So everyone have a great weekend. I'm excited. I spent about the last year and a half just trading, working on software, not really trying to. We pretty much cut our marketing budget to zero, and now I'm gonna, focus half on trading and half on getting customers for our software and getting everyone trained, and pretty much trading the way that I teach. And these methods work. I've traded for 12 years. These are the best methods I've ever come up with for Forex.